I still love that intro. Okay, so this is going to be about charting. This is kind of more advanced. This is going to be some training in regards to trading. Now, what's cool is if you understand this concept, you can make trading type decisions, investment decisions if you're trading on any time frame, depending on a couple of factors, which we're going to talk about. But before we get into all that, need to run a disclaimer. All right, let's bring up the charts. This is a little different format. I'm trying something different here. You know, if you're on a cell phone, it might be better to watch this on a computer screen, laptop, or something larger. All right, just quick overview. All right, I usually do this even if I'm using my cell phone. I'll look at the weekly. Right now, I'm doing Ethereum because the Purple Ninja does Ethereum. In fact, I went through this with her yesterday because she was stuck in a trade. And literally, here, let me make this big. I know it's going to repeat if you watch the previous stream I did today. Imagine this wasn't there. This day here, this was happening, right? We were looking at it yesterday. I talked to her. It looked like it was losing momentum. In fact, let me see if I can just make this a little bit more visible. And I want the daily. Come on. So when I was talking to the Purple Ninja yesterday, because she doesn't use my spreadsheets or anything yet. All right, so let's pretend this is what we were seeing yesterday over here, this corner. When this was happening, right, this spiked down a few days back, right, and then it was losing momentum. Notice this little trend. It's just not going down as far. So I told her that what a lot of times happens over the weekend is on Friday night, the trading stops in America, right? So Bitcoin, Ethereum, and some others are traded on I think the NASDAQ, I think it's the NASDAQ, through Grayscale Trust, right? They buy and sell Ethereum. Anyway, so on Friday night, right? When was Friday? This was daily, Wednesday, Thursday, Friday. So this was Friday. So when the markets closed, things were kind of trending down and sideways. Now what happens is during the weekend, things either go lower, right? Or they go higher or whatever. And then Monday morning, all the bots, as soon as that bell rings and it's just on for trading, people who had higher positions, if their positions are lower, they start selling to, protect their position, stop loss type thing, right? Usually set to 10% loss, great way to lose money consistently. And then, but if the market's high, then there's a sell off to take profits. Anyway, there's usually a spike up and down. Oddly enough, it didn't happen. All right. I told her the best thing that could be happen because she was kind of a little bit upside down, not majorly upside down, just a little bit upside down. I think she's about like, I don't know, 15, 20% upside down. I didn't run the numbers, so don't quote me on that. I just said, looking at this, probably things were there's going to be a spike Monday morning. I told her to raise her exits because she just wanted out because she's, holding. The purple ninja is not very patient, just saying. So what happened? Well, it spiked down. This is a almost textbook, right? It spiked down. Now, refresher course from training number 1, standard Bollinger Band is 2% standard deviation from whatever the current pricing is, right? Median pricing, whatever. I don't know the calculation, but it's standard deviation of 2. You can go in there and change it to 3. And if you were to do that, you'd see that this bottom line would probably go down to about where this bottomed out, either at it or just before it. It just happened right now. There's 13 hours left in this day. And it also spiked up between the top Bollinger Band and the lower Bollinger Band. A standard deviation of 2 and went a little bit further on the down dip, which means if she set traps based on the daily, and she was looking at it from here, she would have had traps probably all the way down to 2,000, which is way down here. Why 2,000? Well, the first train, 0 and 5. Do you remember that? Do we need to have a refresher? Let's have a quick refresher. Let's see if I can bring it up real fast. Let's see here. Psychology. I have it. See if I can bring it over here for you guys to look at. All right. I want this one, and then I want psychology. Pretty cool format, huh? All right. Psychology. The ending numbers, right? So here, Ethereum, 2330, right? What's important here? Well, where's the closest 5? 2,500. We're testing 2,500, right? But a little bit lower, we're testing 2350, 50, right? What's the lower numbers? 10s, 50s, 100s. The larger the numbers with the zeros or the 5s, right, is your supports and your resistances, right? So up here, we're probably looking at, in the last 2 weeks, it tried testing 25, didn't even get near it, right? And it tried to test 2,000 a week ago, didn't get near it, kind of channeling sideways. Ethereum is. Bitcoin kind of do the same thing, but today we had this nice little doji, and our MACD is telling us it's losing momentum, going down, right? It's rounding out. All right, 0 and 5. If you remember 0 and 5, you start asking yourself, where's the psychological next step, up or down, depending on your time frame, right? The longer the time frame, I'm just going to get rid of this. The longer the time frame that you're looking at, you're probably looking at the larger scales. So like on the daily, we're looking at a low of 2,000 and probably a high right now of 2,500. Once it reaches 2,500, goes above that, what's the next big one? The real big one would be 3,000, right? The next one, when it hits 2,500, is 2,600, right? It goes down to the 0 and 5. If you get that, you'll be able to see it in the psychology of the training, of the charts. The charts will teach you everything. All right. Okay. So we look at this. This is the weekly. This is the daily. You want to look at the monthly? Oh, what's going on in the monthly? We're just getting started based on the monthly. Ooh, kind of exciting. Is that reliable? Well, could be. It could also, something crazy could happen, right? There's no guarantees, right? But according to the data, it looks like next month or next few months this year is going to be pretty bullish. All right, nothing fancy. There's nothing fancy here. There's bazillions of ways of looking at the market. These are the indicators I look at that helps me give an idea what's going on. All right, now I promised this was a part 2, right? So we're gonna talk about actual trading. So I'm bringing up another set of charts. These are my active trading charts. Am I gonna do an active trade on this show? No, I am not going to do that because really, if you wanna do those sorts of things, you wanna dial in around market opening and closing if you wanna get in and out fast. And the best, most active markets are in the US opening, and then whatever happens in the US tends to happen throughout the rest of the world till the next US opening, okay? United States tends to, set the, stage for what's next. So this was Bitcoin. So let's put this on Ethereum because we're looking at Ethereum now. All right, and I'm just gonna this is Ethereum up here. Kind of cool because now you're not having to see me in the corner blocking the data. All right. This spreadsheet over here is a Google Sheets available to Patreon members and DDTC founders. Um, DTC is kind of what it was. That was what I was calling it years ago. And I started sharing stuff with friends and family. We had a couple friends chip in, and we got some advanced data analytics that we still get. And I do share some of those research by recommendations from several different sources. We spent, I think, almost not quite $15,000 for a lifetime membership for some advanced data analytics for everything they have forevermore. And then there's some other analytics I spent thousands of dollars on previously that actually turned out pretty good for buy and hold scenarios or dollar cost averaging. All right, so this is about trading in charts. Now, if you're looking at when should you buy, right, for holding, if you're looking to buy and hold, then I would be looking at the daily and the hourly, the 3 and 6 hours. And when those bottom out in the red, those are good times to buy. Okay. Not trading, just buying. When you see that thing collapse red, goes down, hits that bottom Bollinger Band or bottoms out, that's probably a good time to buy on the daily. Okay. The longer the time frame that you're waiting to bottom out on, probably the better your long-term profits will be. Just kind of my lens of the world. Not giving you advice, just telling you how I would look at that. Buying and holding. Dollar cost averaging is when you are like totally ignorant and you're lazy. You just buy the same day, like on Monday morning or Sunday morning or mid afternoon when there's generally a weekly dip. Not always, generally. Over time you do pretty good, right? You're probably not going to get wealthy unless you do that sort of thing over a lifetime. But if you get the right things, like in crypto, you find a Dogecoin before everyone knows there's a Dogecoin or a Shiba Inu or a Solana or a Pendle or a Storage J or whatever, XLM, Matic. These are all ones or RNDR. That one just, goodness, I did really, really well with that one and the PRY, but I used a bot. Yeah. I'm too busy to actively trade, but I've been having my fingers in it. All right. So the title of this thing is announced as Mission 1, right? Well, that's about hourly, but we're going to do some advanced stuff today. I'm going to show you how I would active trade. This is the 3-minute. This is the 5-minute. We're in the Ethereum. All right. So let's get rid of this. So we're lined up. 5-minute, 15-minute, 3-minute, 15-second, 1 minute, 5 seconds. I can bring up every second if I wanted to. It's just kind of why bother. All right. So if I'm trading, let's say I get up early in the morning, which usually means I need to go pee. I'll bring up if I'm in the mood for trading, I'll take a look at these charts after going through the weekly, monthly day. What happened or what is happening. But one of the things I look at here is I will look at what's the difference between the bottom Bollinger Band and the middle Bollinger Band on the 3-minute. So in this case, 23.26, 23.31, that's what, 5? Right now, the market is so slow, I would not trade it. What else would I look at? Well, I'd look at the 15. Is a 15, are we bottoming out? Oh, we are bottoming out in the 15. Excuse me. Sorry, I need to get a drink of water, everybody. This is my little trick. Keep my life simple. 23.25, 23.41. So the 15-minute and the 3-minute are basically the same. Why is that important? That's the thing I look at is like, what's my time frame? Let's go back to the other time frame here. Let's go back to the hourly. This is the hourly here, right? Should we make it big? Get your notepads out. I mean, seriously, or come back and watch this and take some notes on this, because this is, if you want to know how I'm able to trade usually without taking a loss, generally, I don't think I've taken a loss in a long time, a couple of years in my trading. Do I trade all the time anymore? No, not as actively as I did. Why? Working on other projects. This is kind of a hobby. Trading is boring to me, but the strategy behind it I enjoy. I've been kind of working on setting up my strategies with bots. So this is the hourly right here in the middle, right? Should we just, all right. What's the difference? Let's make sure I'm in Ethereum. Cindy, this is the magic. If you want to know my magic of how I'm able to do what I do, it boils down to this. Right now, the MFI is high. I mentioned that because if you're an Anna Mako person, you know that you're going to wait for this to come back down, because I think MFI is the only thing she trades on, or at least it was. I haven't tuned into her trading in a couple of years, but it was pretty interesting, the MFI. So right now, the MFI is saying stay out. The MACD is saying, yeah, probably want to stay out right now. What is the analytics say? Oh, it says, oh, we're buy. We're no longer strong buy, but we're buy. The technicals. Yeah, I love this. Is all the advanced quant all rolled into one, says buy. I wouldn't buy this. Sorry. Just wouldn't do it. I might buy it to get in and out at high leverage, but we're not even there yet. So hold your horses. So what's the difference between the lower Bollinger Band and the middle Bollinger Band? What happens to be where this red line is. That red line is an HD, what's it called? Do I have settings? Can I show it? Canvas. Gosh, I know I'm such a baby at drilling down in these different things. Anyway, it's a HD. It gives you this thing, the sideways thing that shows you where the volume support and resistances are. So let's say I want to trade on the hourly, right? I would wait. Let's say I would wait for this to happen. See this red thing happening here? When did this happen? This happened yesterday at 1900. So that is 7 o'clock Pacific time, because my charts are set up for Pacific times. At least that's what they should be set at. What time is it right now? 1500. It's almost 1600. So, okay. We're 30 seconds. 30 seconds, this candle's going to cover. So we are in Pacific time. And it's gonna maybe tick down because it's red. All right. So what I would do if I was trading on the hourly, right? I would wait to see this happen. But then I would measure, like, what's the distance between here, 2179, and this 2223. So what is that? Is that 100? No. 30, 50. $50 movement, right? Roughly. Here it's really big, right? So it'd be 2169, and let's just go up to this. 2163, 69. So almost $100. That's kind of significant. So, if you were trading on the hourly and you see this happening, it opens this up. I take a measure between here and here, and that'll give me an idea of what leverage to use for my trade, or if I'm just buying. If you're a U.S. citizen and you're not an e-resident that allows you to trade where you have access to leverage, sorry that your rights have been infringed because of your government, U.S. citizens. You should write in about it. Why do people in socialist countries or Europe have the ability to have leverage trading, but you do not? Are they more sophisticated and better educated than you are? Apparently. I know. I'm being facetious. Okay. Your only options are to get a e-residency and get in on exchange doesn't require you to show proof of residency. Those would be Hong Kong exchanges, I think, are the only ones left in the world that actually allow you to have freedom. Yeah, it's to prevent trafficking. Sure. Money laundering. Sure. Yeah. No, none of that. All that stuff has happened before there was crypto, but it's a great way of saying, hey, listen, if you're homeless and you can't prove a residential address, you don't get to participate. You have no opportunity anymore in America if you're homeless. Your rights have been violated. Sorry, homeless people, but you don't really have a voice, so no one cares. I care. It's just wrong. All right. Why is this important? This little oversimplified spreadsheet is about what's your trading leverage, right? What's your trade size based on this was set. She's obviously not using it. That's funny. But this is set up so that as your funds increase, your trade size changes based on your trade leverage and your reserve factor, which is set to 20, which is like 1/20th of whatever the volume is. So, well, let's go back. About a 50-cent trade at 100x leverage. Sorry, U.S. citizens, you can't do that. You have to put in hundreds of dollars and go at risk with little leverage or some kind of option program or something. Oh, what just happened here? The data analytics change. Oh, wait a second. These are the 5 minutes. Yeah, it's a little weird. All right. So let's go back to this active trading. 3 minutes. So if I'm trading at 3 minutes, what does that mean? That means between here and hitting the middle Bollinger Band, how long did it take last time it happened? Well, let's count it. Here's 3. That's 1, 2, 3, 4, 5. Typical. Took 15 minutes. 3 times 5 is 15 to go from the lower Bollinger Band to the middle Bollinger Band. Now, when the markets are roaring, I want to be able to see a 1% variance between the bottom Bollinger Band and the middle Bollinger Band. I don't need a 1%, but I prefer a 1%, whatever that is, right? Why? Because at 100x, a 1% movement is a 100% ROI on the trade. I prefer to at least get 30% ROI. So, of course, I don't have my calculator handy. Can I bring up one? Yeah, I'm not going to do that too. Wow, this is kind of weird. Hold on while I get myself set up here. So we're at 2,332 times 0.01, 1%, is a $23 movement. I usually have a little handheld calculator for this stuff. All right. I usually am not interested. If I can't make 30% on a trade inside of, like, say, 3 to 6 minutes, I probably won't trade. That's just me, unless I'm doing trap trading, which is a good place to start. It's really easy to learn this stuff. discussed that kind of in lesson 1 and some of the previous stuff. Now, I have to put on my reading glasses because I'm old. New reading glasses, not a sponsor, but these are digital. They have 3 separate. So there's reading glasses, and there's less, and then there's even less. So they're really cool glasses. They're about $30 some. I think these are Foster Grants is the brand, but there's a variety of manufacturers. And I think I like my old version glasses better, which was an off-brand. Anyway, these are really nice though. So this spreadsheet, let's see if I can make it bigger here. Let me zoom in. Can I zoom in? Can we zoom in? Nope, wrong direction. All right. Let me explain this spreadsheet a little bit. We'll do it in relationship to this 3-minute. Can I just do the 3-minute chart by itself? Let's do that. That might be easier to track what I'm saying here. Okay, here's the 3-minute by itself. Ethereum. And I'm going to scrunch this up. And I'm going to take a look at this, make it bigger. One of the things you have to be wary of with charting is you can always find a chart that supports your bias. What do I mean by that? I want it to go a certain way. Well, right now I'm upside down, but I want to see it going up. Okay, well, we'll switch to the monthly and they'll see it going up. It'll tell you what you want to see. It's kind of an exaggeration. Let me explain this spreadsheet. You don't have access to the spreadsheet unless you're a Patreon subscriber. Costs you $5 a month. You could join it for $5, get all my information, and quit. If you really want to be a broke-minded human and not be a part of what I'm trying to do here long term, then you can go ahead and do that. Whatever. Or you can just make your own spreadsheet based on the information you gain from me. You can do that. Fine. This spreadsheet is actually fairly recent. When did I last update this? 11/24/2023. It's also set up for Bitcoin and Ethereum. This one right here. All right. Let's cover this. This will be like a little mini masterclass on using the spreadsheet. So if you're in a trade, right? This section here. So let's pretend that that's all you can see. You can't see this other part of the chart. That's what that's for. This width makes it easy to use on a cell phone. Okay. This chart is for a different purpose. Okay. All right. So if you're in a trade, right, what this tells you is if your fees are 12%, and the fees could be different depending on what exchange you're at, whether or not you're in overnight, because fees are accessed, I think, 3 times a day on the exchange I use. And, the leverage on Ethereum, max leverage you get is 100. However, if you are a U.S. citizen, you have a max leverage of 1, meaning you don't have any leverage. No leverage. I don't think I can put 0 in. Let me see. Yeah, 1. So if you wanted to get a 33% ROI on your trade as a U.S. citizen based on an entry of, well, let's see here. Let's say you entered it right now. You just took an entry, $2,333. Let's just, boom. To get a 33% return on your trade, it would have to move about $1,050. You're at 0 risk though, right? So it has to go to $3,382 roughly in order for you to get that 30. To double your money, it would have to go to just under $5,000, $4,945. That's what this chart. You want 300% ROI? Ethereum would have to just go down to $9,600. Welcome to no leverage trading in America. Someday, when they approve an ETF, eventually they'll give you access to an option, and then you can play a little gambling game of where's it going to be during the option period, and will it gain? And then you'll have access to leverage. But it's what you have though is you have a premium. You don't really, you know what I'm saying? You're not really trading. You're trading the option. This theory and process, I think, would work with options. But if you wanted to 2% is well, wait a second. Here. At no leverage, it'd have to move $326 to get a 2% ROI. Now, these ROIs here, this has the calculation with 12% fees to get in and out. If your fees are less, which they probably, well, I don't know. I just bought some Bitcoin on a US exchange, and it was just kind of ridiculous what the fees were. And they also had a spread too. It was like I was screwed. And I complained, and I don't think I'm gonna get anywhere with it, but it's not a big deal. It cost me about they overcharged me in fees, and they robbed me about $30 in price action. All about $70. Kind of just ethically wrong thing. All right, so the purpose of this thing here is if you're in it, you took a position, you have to determine when to get out. In this chart lets you know, well, what is your basis? Are you wanting 4% per trade, 33% per trade? The ones in black are my reference points. I usually go for 33%. That's that. I can get it all day long when there's a bull run happening. In fact, when there's a bull run happening, I usually just might not necessarily take the low hanging fruit because I know what's happening. And instead of I've had as high as like 800% ROI in a matter of an hour. When there's a bull run happening, I think that's the best I ever did. That was with Ethereum. May not be the best I ever did. That was when I was tracking results. And that wasn't even during the bull run. It was during a short bull day during the downswing a couple of years ago. Anyway, I just remember doing it. It's like, man, I'm just going to let it ride because I do a thing called a staged exit. I have those traps to enter. Well, I have traps to exit. And the Bollinger Band is just fine at 2% standard deviation, but I'm thinking 3% standard deviation. And it looks like we just had a nice little upswing. Look at that. Nice. All right. So you understand what this is now, right? You're in a trade. What's your ROI? Now, here's a tip. Most people say, well, I want 33%. What will the market do you 33%? This is magic. Take notes. Cindy, notes. Chop, chop. When I go here and I look at here, 33%. So let's say I'm trading 100x leverage, which is the max I could trade. I think it's safer to do high leverage trading if you interpret risk as a function of time. The sooner you can hit your goals and get out, the better. Less risk. Elon's sitting on the toilet somewhere, about to do a tweet. You're in and out in a couple minutes. He sends out the tweet. The market tanks or goes into a rally. They can go work either way. You just don't know when he's in the toilet. You just don't know. And you don't know if he's going to tweet something. You just don't know. You don't know if China's going to shut down their power grid when majority of Bitcoin was being processed. You just don't know. So the longer you're in, you're at risk higher for just these crazy ass things that happen. Or the United States SEC, the moron at the top says, "Oh, I don't like crypto," and boom, there's a 10% dip for the next 24 hours or some stupid thing. Although they keep losing their lawsuits, everyone's suing them and they don't have a good track record. It's obviously malfeasance on their part as an SEC. Why they aren't arrested for fraud, I don't know. We don't have good enough oversight of our government regulations by civilian oversight. But that's just my opinion. All right. You should write in about your rights, by the way. You should have the same rights as any qualified investor to do anything you want with your hard-earned money that you paid after tax. I mean, if you can go in and play the lottery with your money, and you can go into a casino, you should be allowed into any business or financial market. Now, if the business is built on fraud, there's already laws against fraud. You're just part of the people that were damaged, right? We don't need a layer of, rich people versus poor people. No, we don't need that. That's discrimination. Shouldn't exist in America, right? No such thing as a qualified investor, anything. America wasn't built with that ideology. American built was, you got $1 and you want to buy 1/10 of a share of my new startup idea, which everyone else thinks is crazy, and you do it and you become a millionaire. Wow. Well, I guess if you know the startup person, then there's some exclusions there. But yeah, but they're trying to protect against the Squid Games guy, like we have in South Korea, right? He mortgaged his house to get it on Squid Coin. If you didn't watch even the first episode of Squid Game, you would have probably thought that, what, it's probably not a good name. But he lost his entire life savings, which was the equity in his house or something. I feel sad for the guy, but I respect his rights to do it. Well, he was unsophisticated. No, he was greedy because he's living in an environment where he thought he wanted a lotto ticket. He heard about SHIB and he heard about, Dogecoin. Yeah, it just, we have these things happen every once in a while, right? That's opportunity, right? When you're regulated, where you're excluded from even participating in the opportunity, now you have no opportunity. Well, yeah, we're protecting the dumb people. No, I think dumb people should have the same rights as the smart people. Then we should discriminate based on intelligence. Okay, that would actually be fairer than discriminating based on financial status. All right, didn't mean to get political. What's this other sheet for? Well, can we reverse this a little bit? Maybe we can. I'll hide the first part of it so it's not so confusing. All right. Come here. All right. So if I measure this, and I may redo this spreadsheet, by the way, specifically for this purpose. If I measure between here, excuse me while I lean out of camera range, 2328 in the middle Bollinger Band is 2332. That's 4. Let's go here in the chart. You probably can't see the chart. Let me make the chart big. It's $4 moving in the Bollinger Band. Let me see if I can make this bigger. Maybe you can read it if it's bigger. All right. So I'm at 100x leverage. There's a $4 movement happening. And this chart also takes into consideration this trading fee formula. So I could make, let me just double check to make sure it does reference that formula. C4, maybe it doesn't. C3. Oh, it doesn't. I have to fix that. All right. Didn't mean to get you segued. Don't worry about it. So, okay. Shoot. Okay. It's the principle that counts here. Okay. So $4 movement will give me a 15%, 3.5, right? I should have a little calculation where we're going to type in what it is. It'll tell you what your potential ROI is based on your leverage. I have an idea for evolving this spreadsheet to the next level. All right. But basically, $4 move, give me 15% minus 12% in fees. I can make 3%. Why don't I just got to look at something here. Maybe I had to take it in consideration. All right, I will assess that sheet later. Let's just forget the fact. Just assume that it takes in consideration. The process is what's important. I know I've totally confused everybody. It's like, David, stay on track. Work this stuff out. Let's look at the hourly in this scenario. Okay, I'm getting set up here. I'm going to go to a single. This is our hourly. This is 30 minutes. I want hourly. All right. Can we bring our spreadsheet back? Where did our spreadsheet go? Oh, never mind. It's over here. All right. This one down here. All right. I'm just going to get rid of this. And I'm going to get rid of this one. Sure, save and close. All right. This is the hourly. Is this the hourly? No, this is the 1 minute. It messed up on me. All right. We're going to adjust this real quick. Sorry. No. We are now on the hourly. I just have to adjust the chart so that we can see it with some kind of reasonableness. What's going on here? I should just, never mind what I should have done. All right, so here's the hourly. Let's make sure that we're on Ethereum. We are. So when did this happen? We're bottom out. It was yesterday at 6 o'clock. That makes sense because at 5 o'clock, there's some stuff that opens and it switched over here in the hourly, right? So let's say you're waiting for this waterfall. Waterfall happens. Let's pretend it was yesterday and it's here is what we're seeing. You following me? I'm going to measure the distance. And there's a tool for this, by the way. There's a tool for it. I'm not going to demonstrate the tool because I don't really do it that way. I should learn how to do it that way. So the low was 2182, 22, 27, 22, 30. So let's just say 2180 to 2230. What is it? It's $50 movement. Now we come over to our chart. $50 movement. Well, somewhere between a 200 and 300% ROI if you entered in a trade based on the hourly. Less fees. You can pay your 12% fees pretty easy there. But then again, it might be a little bit higher fees because you're at high leverage and you were in for a day. But this is based on the hourly, right? So what happened? What's the low hanging fruit? You see my stuff, LHF, right? Low hanging fruit. Well, it's the middle Bollinger Band. Well, what is that? 220. We got in maybe somewhere around here. Oh, 2170. Oh, that's even lower. No, we're just 80 to $50. So let's see. You'd have gotten in, you would have went to bed, you would have had your exit happen here. So 1, 2, 3, 4, 5 hours later, you'd have made what? 250% ROI. I had to go back to just doing that. The problem is you're also assuming 5 hours worth of risk, which is why I wouldn't do 100x at that. But that's what this chart, this spreadsheet is, and it's evolving. I already see several different versions of it depending on what I'm doing. But what's important for the training purpose is this habit of like, well, am I trading on the, well, David, how about let's look at the 15 minute. All right. What's going on in the 15 minute? Let's trade on the 15 minute. It's going narrow. That's usually meaning something's breaking out. So I adjust this visually so I can measure it. So I'm at 23.24. Look, it literally went down to 3% standard deviation on the 15 almost. Anyway, just something I've noticed. So let's say 23.24 and the middle Bollinger Band is 23.39. Okay, so let's go 23.24 and 23.40. What is that? 10. What is that? 6 and 10, 16, 15, about a $15 movement. Don't mind me. I haven't been doing basic math for a while. So about $15 movement, well, you're somewhere between a 50% and 75% ROI. And how long would it take you to do that? Well, it didn't happen yet. It looks like we're downtrending, but it's losing its momentum going down. But if you were to get, if you got in where it's right here right now, but if you would have gotten in here with a trap, somewhere around here, you'd already be in profit. So let's say you trapped this 24, 32. So that's 8. $8 movement. Oh, you're right in my 33% ROI range on the 15 minute. How long will it take you to get there? Well, we don't know. It hasn't completed its cycle. Oh, it looks like we've got downward pressure happen, right? And I wouldn't just trade on this chart all by itself. I'm looking at all those charts to figure out where it is. I'm waiting for the hourly to bottom out, and then I'd make this play. But if it was going sideways, right? What I see now here is probably profit taking, right? On the 15 minute. It's going narrow, consolidation. It's probably going to break out. It'd be my guess. Or what time is it? Oh, we're coming up to 5 o'clock. So there's markets closing and opening. So that's what this could be about too. But since the day started with this, there's a high probability that it's going to do a dip down and then bounce back up. Be my guess. Depends on how the rest of the other side of the world. The other side of the world might go, oh, wow. U.S. side of the world had a great day. Let's sell and take our profits, which will cause this to go down for a while. I don't know. I don't live in that part of the world. I don't know how they think, but most folks are just like, oh, we're in profit. Let's take it, and they're going after, micro percentages. They're not going after this kind of ROI. But did you get the process? And I'll wrap up with that. Did you get the process? The process is understanding your time frame, right? Look at what's happened in the 15-minute segments today. Waiting for this on your time frame to happen, getting in low, getting out of the middle is low-hanging fruit. And if you want to be sophisticated, you can get out all the way up. You can if you set traps buying in, you can set traps buying out or limiting out, limit exits. But to see if you even are willing to do this market, right? You measure the lower to the middle. The lower to the middle is your low-hanging fruit. The middle to the high is when you're, like, reaching for it, and it may not go through the middle. It may hit it and bounce down, and that also depends on the time frame, and that's why those volume indicators what you've seen here demonstrates some pretty sophisticated possibilities, but I like to just keep it simple. Can you measure that before you even start trading? Yeah. Can you look up in a chart? Is there even enough movement to hit your goals? Well, David, I only want 10%. Okay. And I don't have access to any leverage. Okay. Well, if at 3% leverage, at 10%, you need a $77 movement. At 3x leverage, to divide or multiply that times 3, you need almost a $200 movement. That's not happening. So if you're trading without leverage, you're going after micro movements, and most likely fees in the United States will eat you alive, just getting in and out. But when you have leverage, you have to pay. Well, actually, you don't pay until it's assessed. So you get to actually borrow money for free if you're in and out of the trade before they assess their fees. What? Free other people's money? Yeah, so you put up $1, they put up, $100. You're borrowing $100 against your dollar for free if you can get in and out in a reasonable time frame. What I've talked about in this training, all right? Here, let's turn this off. What I've talked about in this training is a process that you should study and experiment. Because if you're going in for a day trade or you're day trading throughout the week, maybe you start on the Sunday dip and then you trade throughout the week. I call it trading within the trading. And then you exit on the Saturday rally. Happens about 9 o'clock at night before everything shuts down for a whole day. The world is kind of like down for a day ish kind of restarts up on Sunday, right? The other side of the world. You can do that all week long, but you need to get a feel for the numbers, and what are you being assessed? If you are in leverage, high leverage, those assessments are 3 times a day. By the end of the week, you may have given all your profits away to having borrowed the money with the leverage. Oh, that's kind of sophisticated. Yeah, but you should have the right. How are you going to learn it if you don't have access to it? After you're wealthy? Well, how are you going to get wealthy if you don't have access to leverage? Do you see how your rights have been violated in the United States? I mean, we expect that with North Korean citizens. We expect that with Iranian citizens. We expect that, sorry for the Russian citizens, that your leadership's doing what it's doing. Somehow you guys need to redo your government so you can stop shit like that, right? But, that whole country and all those citizens, right? I mean, the wealthy people were seizing their yachts, right? Because they're oligarchs, but they're, Russian citizens. But being a Russian citizen shouldn't really have much to do with what Putin and his rich buddies are doing, right? But they're blacklisted. Same thing with China. Chinese citizens, I think certain things were outlawed, but, whatever. They use VPNs all the time over there to access markets out of Hong Kong. The point is all this restriction on the individual human being's rights is a violation of life, liberty, and pursuit of happiness. Hello, America. We're supposed to stand for that. And yet we're doing it to our own citizens. And we've been doing it for a long time. We just haven't given much thought. Oh, I don't, I'm not a qualified investor. Well, someday I'll be a qualified investor. But the thing is since you don't have access to wealth producing levels of return like qualified investors do, if anything, the qualified investors should be limited to not having access to leverage, where the people who need access to leverage have access. It's literally upside down and backwards because, well, they should protect their wealth. They should be gambling with their wealth, right? But when you got $1, you should be able to gamble with that dollar, except for you can't even You can't even open an account now. But in another part of the world, you can start with free if you can pass a KYC. U.S. homeless citizens can't pass a KYC. The important thing was measuring a little bit, getting a bird's eye view, depending on the timeline you're trading, hourly, daily. The longer the time frame, probably the safer it is with lower leverage. The faster the time frame, the safer it is with higher leverage. And if something triggers a multi-month bear run, you're stuck as a function of time. You have no control over that. But the odds are you'll be in and out before anything hits your trade when you're seeing the cycles happening and you know how to look at it and you know how to measure it. You know how to measure risk as a function of time, not leverage. That's why the automated trading bots do so well. And if they're programmed from this ideology, crazy. But they might get stuck. What happens when you get stuck in a trade? Well, you're assessed fees, a lot of fees, and you have to pay a cover call. You have to bring money in. You have to buffer it. And if you're over invested and you're over leveraged, you're going to get liquidated, and those hurt. If you don't understand leverage, you don't understand where to use it, when not to use it. Yeah, you can wipe out your account. That's why you shouldn't be trading with your life savings. You should be like, have your retirement account over there and just trade with 1% of it over here, not 10%, 1%. Give me leverage and I don't need much. I don't need any money. I can just create an account. They'll say, hey, play with it. Here's $5. They'll take their $5 and about half of your trading profits. But you now have money to work with, starting from zero. I proved you could do that prior to new regulations being enforced around the world. Homeless people, I'm sorry. I did HD1 and HD2 to prove it could be done. I wanted to actually start working with homeless people, and then your rights were totally trampled. Because if your wallet wasn't stolen, you have an ID. That's a different thing. Anyway, that's another live session for another time. The whole point here is this is cool stuff. And I got to end this stream because I got to keep it under an hour in order to process it for some reports and stuff later. So have a good night, everybody.